the big issue for equity investors is the fact that the US is such a dominant part of the index. There is a lot of value in the rest of the world. So if in our global equity portfolio, if we looked at it regionally, we're overweight the UK, we're overweight Japan. We are underweight a US market that's 70% of the index. So, I think that there are some. One of the interesting things for 2025 will be there's a huge amount of expectation based around on Trump 2.0, tax cutting, low regulation, great for business. And is the reality actually going to be that, hang on, it's maybe not that simple? The backdrop is different to when he was first elected. I mentioned already, the budget deficit was 3% of GDP in 2017. It's now 7%. Yeah. If you look at the backdrop in terms of inflation, it's radically different. The risk now is that inflation starts to pick up again. We were worried about deflation 8 years ago. So I do think that this sort of idea that Trump 2.0 is a reason to keep buying US stock market, I don't.
But let's
think
even let's go halfway down the road on that scenario. Let's say it is good. Let's say that Trump is great for deregulation, great for ripping up all those inefficiencies that are created by various government agencies, great for the ability of Americans to have a more insulated market because of the tariffs and what have you. How much of that's already in the price?
Exactly.
Well, look at the valuations on the S&P. Look at the valuations on the S&P ex-tech now. It's not cheap.
And it's not, and it's not just the valuations as well. It's the positioning. So investors aren't just saying that they're quite optimistic, but if you look at if you look in things like the sort of flow of funds accounts, which is a bit esoteric, but the level of ownership of equities on household balance sheets is as high as it's ever been. So there is a huge amount of optimism both within the United States and outside the United States about the United States. And I think that that's one of the challenges we're going to face is, does that mean that we should take some different view to what we currently have? The problem is that if you start saying, well, I don't particularly like US equities, it's probably not a great idea to go puddling into some other market, because if the US goes down, I doubt the others will. But China is an interesting one. Right? The assumption is that China is going to be a big loser out of Trump 2.0, but that could be another area where perhaps there's a lot in the price.